Hey guys, and welcome back to another video here on the channel. If you're new, my name is Brandon. As always, you can feel free to check out our Investing Academy, which is that first link down in the description below. But in today's video, we're going to be doing a bit of an updated list on what I believe to be are some of the top or some of the best stocks out there that you can buy to generate and to build up your forms or your streams of passive income. And when you invest in stocks in the stock market, there's typically two reasons why an investor would buy a stock. And that is A, for the capital growth or the capital appreciation, hoping that a stock goes up in value, the share price increases. And then B is for dividends. That would be your second form. Those are probably the top two, which is essentially just getting a stream of passive income, like a little payment, cash payment that you get from the stock just for holding it. And in today's video, I'll hopefully display for you a list of my top selections. Companies that give you a little bit of both. Some lean heavier towards the dividends. Some will give you a really nice balance of both. I'll try to throw in a list here of stocks for all sorts of people, from older viewers, older investors to younger investors. Really try to give you the big range and hopefully identify some really good companies to, at a minimum, throw on the watch list and possibly look to do some more research to add into your portfolio, especially if we do see another sell-off anytime soon in the markets. Not saying that's what I'm expecting, but hey, you never know, right? Always want to have these stocks on your watch list. So if you enjoyed, give this video a thumbs up, but we will start off with stock number one, which is an all-time favorite, very hard to argue with, and that is the company Johnson & Johnson. And as of today, we are looking at about a 2.72% dividend. The payout ratio on this stock, the dividend here is 51% payout ratio, which essentially means with Johnson & Johnson, they're taking 50% of their earnings. So they sell a bunch of, well, if you're not familiar with Johnson & Johnson, first of all, this is the massive healthcare pharmaceutical company. They make all sorts of products, from Band-Aids to lotions, you name it. If you have a product in your drawer or cabinet, good chance that Johnson & Johnson plays a part in that. They sell billions and billions of dollars in the healthcare space year round. What's left out of their earnings, they actually take 51% of that. They take half of it and pay that back to shareholders in dividends. And that's, of course, the payout ratio. What is super fascinating about a company like Johnson & Johnson is you see 57 years of consecutive dividend growth, not just payouts, but actually increasing this dividend. You see they've been growing it, at least on a 5-year number, at about 6.32%. It's more or less one of the classic dividend stocks out there. And along with the dividend, you are also getting some very, very nice capital appreciation. This is a stock that I believe belongs in really any portfolio. If you were to tell me younger, older, you got the growing dividends, you got the capital appreciation, is very hard to argue with a stock like Johnson & Johnson. Next up, we have in the Canadian market, we're looking at an energy company. This is the company Enbridge. And as of today, we're looking at the 7.07% dividend. So a above 7% yield if you were to start investing in this stock today. This is, of course, an energy company out of Calgary, Alberta. When you are dealing with the energy sector, you do have to understand that this typically comes with a little more volatility, not a little more volatility. Energy stocks are quite volatile by nature, meaning that if you're going to own this stock, yeah, you'll get a nice stream of dividends, but the share price does tend to fluctuate quite a bit. We are looking at, in terms of the dividend, we're looking at a 7 years period of growth, which has been, this is a high priority for a company like Enbridge to pay out their dividends. We actually see the rate that the company is growing it at. We're seeing a really nice growth rate here on a 5-year number of 16.09%. So again, a little more volatility, but with the shares currently trading at $43, you're looking at a very, very nice starting yield. And note that this stock does trade on the Canadian market, the TSX, as well as the US market. So you got to make sure you're looking at the right one depending on where you're watching this video from. Moving along to stock number 3 for this list, and this is one that I got a lot of stick for talking about in the past, but it's one of my favorite stocks. Just one of the more classic companies. It's the company General Mills. Today we're looking at a 3.1% dividend, so a very nice sweet spot of a range there, not too high, not too low. I remember including this stock a little while back on one of my top picks, and people thought it was a dead stock, saying General Mills is so done, so old school, don't buy this company. And what do you know? The company has picked up. It's been a great performer in terms of share price as of recently, as well just one of the most reliable dividend payers out there. In fact, with a company like General Mills, they're not growing the dividend super aggressively, but consistency is something they aim for. 22 years of growth. Again, you'll see the rates are not anything massive, at least compared to something like Enbridge, but General Mills is just one of those companies, forgot to mention, they're obviously the company, the massive consumer goods company behind things like Cheerios and Lucky Charms, you name it. They make a variety of breakfast foods, kitchen materials, or food materials. They've even recently made a dive into the pet food segment, giving them just a little more diversity. This company has been around for decades and decades, and I think will continue to be a great hold for decades and decades to go. They've really got the track record to back that up. As of today, we're looking at a stock trading at $64, and this is, of course, trades on the New York Stock Exchange. General Mills is an American company. Bouncing back to the Canadian market for the next pick, we got another 7% yielder. Currently looking like 7.29%. It is the company Power Corporation of Canada. The ticker is POW, and this to me is a very, very unique way of playing the financial space. Of course, this is aside from the big 5 or 6 banks. It's kind of a backdoor way that gives you exposure to the insurance side through companies like Great-West Life. You have access to a new and growing investment platform in Wealth Simple, which I know a lot of our viewers may very well use, a very popular platform here in Canada. This is a stock, and that's just to name a couple of their companies under their umbrella, but this is a stock that's showcasing 13 years of growth, a very consistent grower of the dividend, right around that 6% growth mark. That's, of course, increases per year. This is a stock that I think is an outstanding one if you are looking for that passive income. You'll notice not a whole lot of capital appreciation. It's not your, I wouldn't say your best stock if you're looking for growth, but if you are looking for a reliable dividend, if you believe in the Canadian finance space, and that goes for insurance, investments, you name it, Power Corp of Canada. Power Corporation is a cool one to look into, again, with the 7.29% dividend currently. Moving along to the next stock, which is one that I believe is suitable for pretty much any investor out there. Even if you're new, it's very hard to go wrong with just selecting a stock like this, is a company PepsiCo with the 3% dividend. This is, of course, a great alternative to Coca-Cola, which is another classic. You could pick and choose between the two, but at the end of the day, you're getting very much similar company. PepsiCo does, of course, give you exposure into the snack side of things. So they own chip companies and whatnot. You're getting more than just beverages. But this is a company that's been growing their dividend at 8%, so slightly higher than some of the other stocks we've covered today. We see an outstanding track record of growth with over 48 years of dividend growth, putting it in the category of a dividend king, a dividend aristocrat who can consistently increase their dividends. The stock is currently trading for $136 USD. We see a very, very nice growth pattern on this chart. Again, make an argument. Leave a comment down below if you don't think Pepsi's a good stock to own in a portfolio. I look at a share price like this, a dividend like this with this reliability and just the brand name they've built up, I'd like to hear an argument for that. So feel free to leave it down below. But moving on to our last couple stocks, we have 2 more American stocks to finish off. Although I'm Canadian, I find myself investing in a ton of American options. I think that they've actually have a superior option, especially when it comes to consumer goods, kind of companies like the next 2 we'll talk about. The second last company that we'll be covering today is the company Starbucks, ticker SBUX, and we're looking at a smaller dividend, but a world-renowned dividend nonetheless, 2.16%. This is a company that if you do take a look at their payout ratio, which we looked at with Johnson & Johnson, you are seeing currently actually a very high payout ratio. They're paying out more in dividends than the company's earned, and that's of course because Recently, it's been a very tough time for Starbucks with the earnings really dropping down. That said, when you're able to stretch out and look long term, I never like to let these short term blips take away from a very, very powerful company such as Starbucks. They're building their presence internationally. Asia is a big, big part of that. And it's one of those products that I don't think people are going to ever live without. I know that I probably spend far more money than I should on Americanos, but as a Starbucks shareholder myself, it's not the biggest deal. They get me going in the morning. In terms of the dividend, you're seeing a company that has been aggressively growing this. We see a 5-year growth rate of 22%. Very nice track record as well of 10 years of consistent dividend growth. This is dating back, of course, through the Great Recession back in 2008. Again, just an overall world-renowned company. And speaking of world-renowned dividend companies, I did, of course, save the best for last. And our viewers, our longtime viewers, you probably know which one this is. It is, without a doubt, this and Johnson & Johnson are my 2 personal favorite dividend companies. You can leave a guess below, but I'm going to tell you now anyways. It is the company Procter Gamble, ticker PG, and we are looking at a 2.37% dividend. So again, nothing crazy. We're not looking for the highest yields out there. We're looking for the reliable yields. You see a payout ratio today at 59%, so just over half of their earnings they're paying out in dividends. Share price, if we jump to that right away, you can see why the dividend has dropped down, and it's because the stock has just been on an absolute tear. As of 2020, stock's actually up, off these lows, up over 30%. And that's just the tip of the iceberg when you look at the long-term performance of a company like Procter & Gamble. This is, of course, the consumer goods company behind a million of your favorite household brands, Tide, Charmin, Gillette, you name it. When it comes to poster boy for dividends of companies that are able to just generate revenue, generate cash flow, and then redistribute those earnings, make a profit on it, and push those earnings back to shareholders. To me, you don't have to look much farther than Procter & Gamble. It is just an absolute favorite. Again, to highlight the share price, it's a boring old company, but you still get the nice steady growth, a very healthy upwards pattern. To me, some very clear buying points, and if the stock dropped down again, I know what I'd be doing there. You've got over 64 years of dividend growth, not growing it crazy fast like a company like Starbucks, but again, it's more or less the consistency that you're looking for. And especially going through a crazy time like we're going through here with COVID-19, it's quite crucial that you aim for companies that have the track record, that have proven to put an emphasis on these dividends. I know it's tempting when you see a high dividend, people will often get drawn into those high dividends, but if it's not a company that can sustain that, if it's not a company that has the proof, the credibility and the backing, such as Procter & Gamble for 64 years of paying and growing these dividends, you have to be very, very careful with what you decide. And hopefully today I've displayed for you a selection of just some well-rounded companies that more or less anybody should feel comfortable owning. I always will say do your own research, do your own due diligence when it comes to investing in stocks, but these are ones that you will definitely want to throw on your watch list, regardless of age, regardless of your experience or your level, what you feel you are as an investor. It's hard to argue with some of these companies. I'd love to hear your opinions down below. I'm sure there are some really, really good stocks that I didn't mention. And in fact, there were certainly some great stocks out there that I didn't mention. And these are just a list currently of some of my top favorites. There's a ton other that didn't make the cut. But if you're interested in more dividend videos or more stocks for getting dividends, you can absolutely leave a comment down below. I can do a part 2 or a follow-up to this, just detailing my favorites. But yeah, leave yours down below. Very curious to see what you guys have to say. If you did enjoy this video and you want to see, well, if you didn't enjoy this video, you can feel free to give it a thumbs up. That really, really helps out the channel more than you would know. If you're not already subscribed, I'd say subscribe to this channel because we post videos every week, usually 1 or 2 videos per week, just like this, talking about stocks to buy, really all sorts of stuff. And then we do also have, if you're a beginner to the stock market, you're just getting your feet wet and getting started, you should definitely click the link down below to learn more about our Investing Academy, because we work with investors, primarily Canadians, and we take them through the entire process. From learning the terms, the lingo, setting a strategy, setting up your accounts, buying stocks. We'll take you through the entire process. And it's just honestly really, really cool. You get to become part of our community, and that's our first link down below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.